Hey guys, this is Michael Chin, and in this video, I'll be showing you how to set up and sell an iron condor. So if you're interested in learning more about investing with options, please feel free to subscribe to my channel where I'll be sharing the strategies and setups that I use, as well as some of the live trades that I take in my day-to-day sessions. All right, let's get on to the lesson. So before we start digging into the iron condor, I want to make sure that you have a basic understanding of what options are. So that means that you have a pretty good idea of what a put option is, a call option, and some of the option Greeks. If you don't, I've put some links down below to Investopedia where you can refresh yourself on some of those ideas. And always, if you have any questions, please feel free to comment below and I'll be happy to help. Okay, so let's first go over why we sell iron condors. You may know of other strategies such as buying calls, buying puts, selling calls, selling puts, selling verticals. So we can go over those real quick, right? Let's say we buy a call, then we are looking for the price of the stock to go above that strike price, right? So we buy the 150 calls, we want the price of the stock to go above 150. We buy the puts at 80, we want the price of the stock to go below 80, all right? Let's say we sell a put credit spread. So if we sell the 150 put credit spread, then we want the price of the stock to go above 150. But now let's say we are selling an iron condor. So if we sell an iron condor, it is usually made up of two strikes. So let's say, for instance, we sell the 170 150 iron condor. Then we actually want the price to stay within this strike zone. All right, so if the price is here, then we want it to stay within this strike zone. Okay, so this is much different than straight out buying a call or selling a put credit spread, right? With these two plays, we want the price to go above the strike price, and then we don't mind if it continues going higher. With the iron condor, we want it to stay right here in this strike zone. And so now you might be wondering, why would we ever make a bet like that? Don't stocks just go up and down? Well, that is true. Stocks do go up and down, but a lot of the time, they actually just do nothing. They just trade sideways, which basically means that the stock price goes flat. I'd even argue that a stock is usually trading sideways 80% of the time, all right? So a lot of times, a stock could gap up and then it'll just trade sideways for 1 to 2 months and then maybe it'll gap up again. But I'd say the majority of the time, a stock is trading sideways. And so when a stock is trading sideways, we don't necessarily want to be buying calls. We don't want to be selling put credit spreads. Like, these strategies won't work as profitably in this kind of market. So that's where the iron condor comes in. If this isn't making sense to you or you don't believe me, we can actually take a look at a chart and examine what prices are actually doing. So let me clean this up here and let's pull up a chart. It's taking a while. Let me clean up the chart for you here. Okay, so we have a chart here of Arrowhead Pharmaceuticals, and I think you can immediately see what I mean. So prices gap up here, and then they just trade sideways. We gap up again, trade sideways. Gap up again, trade sideways. I could continue this on for the whole chart. But basically what I'm trying to tell you is that during these times of sideways action, you can make a lot of profit selling iron condors, okay? These are the best opportunities to sell iron condors, and they are very low risk if you can set them up correctly. So let's actually go back to the trade tab now, and I can show you how to set up the iron condor in Thinkorswim. So let's pick out a stock like Google here, and we can come into the January 17th expiration. So if I want to sell an iron condor, I can right click, and it doesn't matter which side I do it. because the iron condor is made up of calls and puts. So I could right click here, hit sell, and sell iron condor, right? And I can do this on the call side as well. Sell iron condor, and the strike prices will be slightly different, but it's basically the same thing. And so now, as we can see here, we automatically get a body of 1345 and 1342 half. Okay, so 1345, 1342 half is the body. And then as the wings, we have the 1340 and the 1347.5. And in trading terms, the body is basically a strangle, which is another type of option strategy. And the wings are protection, right? So we want to be trading this strangle and grabbing the value out of it, but at the same time having wings as protection, because if you've listened to my videos before, I don't like to sell naked. No one likes to be naked, okay? There's also another variation of the iron condor, and I will show you guys how to do that. So this is known as the iron fly, okay? Iron fly. It is a variation of the iron condor, and I actually use this more often than the iron condor. I actually almost never use the iron condor just because the iron fly is much more simpler. Okay, so we can take the iron condor that we just made here. So we right click, sell iron condor. But the only difference is that instead of having a body at 1345 and 1347 half, all right, we're going to have a body at 1345 and 1345. So the body is going to be the exact same strike price. Same strike. Okay? And so we will do that by coming into the order entry here, and whichever one we want. So if we want it at the 1345, then we already have the put set at 1345. So we just need to change the call to 1345. And then now we have a iron condor with the same strike body, which means it is now an iron fly. Okay, so that might be confusing because if the strikes are the same, if it's 1345 and 1345, how are we going to make money because there's no strike zone in between it? Well, that's the thing. We want it to land exactly at 1345. But that doesn't mean that we're not making money if the price of Google goes slightly higher or slightly lower. Okay, we can actually take a look at this and see how the iron fly stacks up. So let's say I wanted to sell the 20 wide iron fly on Google, right? And 20 wide means that our wings are 20 strikes in length. So we have our body, the 1345, 1345, right? Call and put that we sold, which is basically just a straddle, if you know what that is. And then we will have a 20 wide protection. So we will have the 1325s and the 1365s, right? Gives us 20 points of room. Okay, so let's set that up. So we'll have 1345, 1345, bring this down to 1325, and bring this up to 1365. All right, so now we have a 20 wide iron fly, and this is giving us a credit of 1675, which means that in the best case, we can make $1,670. Let's hit the confirm and send, and we can see that we're actually only risking $325. So that's very good risk to reward ratio, right? We're risking $325 to make $1675. And then let's actually bring this to the Analyze tab where we can see what's going on. So I'll hit right click, Analyze Trade, and I can clean up some of these other things. So now we have the risk to reward graph for the iron fly. You can see that the most money is made if we sit directly on 1345, and the chances of that are much lower than us kind of sitting in this region. But as you can see, within, what is this, 5 or 6 points, we are still making more than, this looks like $1,400 plus, right? And we're only risking 325. So we are well over quadrupling our money here, which is very good risk to reward ratio for this kind of bet. So now you can see why I kind of like this bet. I like to risk 1 to make potentially 3 to 4 times my money. Okay, so now that we've seen the risk to reward analysis of the iron fly, I want to do a quick recap of what we've learned so far. So remember, I like to trade the iron fly. Now, this is personal preference. All right, the iron fly is a variation of the iron condor, and I like to trade it simply because it's easier to execute, right? I just have to think of a price. Oh, I want Google to stay at 1345. Well, let me just sell the 1345 strikes and then buy some wings to give you protection, right? If I'm making an iron condor, I kind of have to do some math and think about, what's the general zone that I think Google's going to land in? Is it going to be like 1360, 1370? It gets complicated. And at the end of the day, when you see a setup and you want to trade, just have the simple execution of an iron fly. And secondly, we also have learned that stocks don't just go straight up or straight down. There are always moments in time when a stock will go sideways. And remember, I argue that it's probably around 80% of the time that a stock is just chopping around and doing nothing. And lastly, I like to trade iron condors because of their great risk to reward ratio, right? There are many times when we can find iron condors with a 1-to-3 risk to reward ratio or 1-to-2, which gives us a great bang for our buck. So now let's take this all into practice and let's see when I would actually use an iron fly. So when I come to a chart here, let's pull up Amazon, I like to actually use some kind of momentum indicator. So for me, that would be the TTM squeeze. And with the TTM squeeze, I like to look for massive moves. So for example, we can see a massive move here, and this is indicated by the TTM squeeze having this downward pressure, right? You can see the red bars. That means that there is selling pressure happening in the market. But then remember what I said, stocks can't sell off forever. There has to be some time for it to go sideways and, really just catch its breath. And so the best way to use the TTM squeeze with that would be to see when the signal starts to die off. And we see that the signal starts to die off right around here, right? This is when it's changing colors and it's coming back into upwards momentum. So the moment I see it start to come up with upwards momentum, that's when I'm going to sell an iron condor. So if we choose this day here, it lines up on the 16th. So I would be selling an iron condor right on the 16th. Okay? And, this isn't really scripted or anything, or you could think it is, but if we look at the current price that it is selling at right now, well, it is selling at that same price that we could have sold the iron condor on. Now, I'm not sure if I would have sold it out this far, which is 4 months, but I might have sold it out a month, which would bring us in this zone, still very profitable, or I would have sold it out, 2 months, we would come out to around here, still very profitable. So if you want to be using iron condors, start by looking at a chart, finding some big exaggerated moves, and then looking for the momentum to start shifting. Now, like any trading strategy, that doesn't always work, right? This one came down completely reversed. Let's see if some more momentum change. Well, this one worked, right? The momentum changed. It just went sideways, so you would have made good money here. But remember that on some of these trades, we're making 1 to 3 risk to reward ratios, right? So if we lose 1, but we win 2, we're making a heck of a money here, okay? We're making great profits. Okay, so that's my lesson on selling iron condors. Thanks so much for watching. I hope you got a lot out of this video. If there's one takeaway that I want you to have, it's that stocks don't just go up and down. Remember, they can go sideways, and they do that pretty frequently. If you have any further questions after this video, please feel free to comment below, and I'll be happy to respond. All right, I'll see you guys at the next video. Thanks.